We're speaking with the SEC Chairman Paul Atkins, and we're thrilled to have him at the table. I have a question about insider trading, an issue that the SEC has always sort of oversaw, but there hasn't been a huge number of insider trading cases in recent years. I mean, not big, famous ones. But there's this whole crypto industry that is not really regulated. And I'm curious what you think of that, which is to say that there's lots of people doing things. And the reason I mention this is 3 or 4 months ago, if you remember, somebody developed a Sorkin coin briefly for a hot minute, worth I think, a couple $100 million at some point.
Wow.
It was a wild thing. And what I saw happening was people were creating these Telegram and Signal accounts, and they were all talking to each other about how they were going to buy and sell. I mean, it was literally like the pools of the 1920s. It was a very interesting thing to watch. And the question, just to see how it was happening, and I was curious where you think the SEC should play in that universe.
Well, I think there has been a fair amount of regulation in that area, or regulatory activity, over the last few years, which has been also part of the problem of innovation. But getting back to it, fraud is fraud, right. And the mission of the SEC is to look after investors, protect investors, but also look after capital formation and orderly and efficient markets. So those are all important aspects of our mission. So the SEC has been very active on that. Do
you have different ideas about how companies communicate with the public, though? Because for so long it was, you had to put your statement on both Edgar, but really on Business Wire or something like that. And now, obviously, you can go on Twitter, or you can do this, but people are going on podcasts. Obviously, they come on places like Squawk. But how you think about sort of broadly pushing out all of this information at the same time?
Well, so the markets live on information, obviously, and that's why inside trading comes up very often. As far as people who have more information than others, right, and abuse their aspect there. But as far as the access to information, that's what's so wonderful about modern markets, right, is that information is all over the place, but it's up to the company, up to the issuer.
What do you think about Congress? So this is going to be a bite the hand that feeds you situation. But no, I remember talking to Jay Clayton about this. I've always thought it should be the SEC who could somehow step in and start to really look at insider trading in Congress, because we've had a lot of questions about whether it's Nancy Pelosi and that family. And there's so many examples where you go to yourself, well, how is it possible that these people are trading? Do you think there should be a rule in place that makes it much more complicated or difficult, or disclosure that doesn't exist today?
Well, a few years ago, Congress did enact a rule that's called the Stock Act.
Yep,
and
I'm aware of it, but it doesn't seem to have shifted the balance. When you see some of the disclosures and also how well they've done, you say to yourself, how is that happening?
Well, I've seen there are all sorts of different studies, right, as to that, whether or not there's any evidence of it. The SEC gets literally thousands and thousands of tips from all over the place, coming in, from the net and from people on the outside, whistleblowers and whatnot. So obviously we take all tips seriously and look into them. So obviously I can't comment on anything, but just let's say that the SEC is very active.
I want to get back to our conversation about private companies, private credit. These are things that individual investors want to have access to. How do you view the role of the SEC in terms of products that investors want to have access to, products that investors should have access to, and what your role is? Or is it your role to put up guardrails here? Is it your role to just say all these products, as long as you disclose properly, they are available to individual investors? Or are there some products that are not a good idea for individual investors, and the SEC will take a more activist standpoint?
Well, right now we are at a cusp of where we need to look at the rules and how they apply. But obviously there are standards for public disclosure, and in the private markets, because of these particular products are not publicly registered, those rules of disclosure don't necessarily apply. But the private markets have developed a lot over the last 40 years, and institutional investors and others make demands on issuers for information. So there's been kind of a leveling of the amount of information that's in both of them.
But a separate issue, private credit, which is the new, it's been done on Wall Street for, I don't know, 10 years, maybe more. But in terms of access by individual investors, that's only opening up right now. Is that an area that investors should have access to now that, some might argue here that we're in sort of the waning days of private credit, and that investors will be marketed the worst of the credits out there that aren't rated properly, that are, the dregs of what's left over that the institutions don't want.
Well, I'm afraid of that too, obviously, and so we will, as we look at, the accredited investor standard and other things, we'll be cognizant of that. And as I said earlier, it's very important to have, good standards as to, what retail investors would be getting into.